Hi, this is Gautam. Welcome back. So in video 1, we looked at non-current assets. Okay? In this video 2, let's look at current assets and the various line items making up the current assets. Okay? Non-current assets. Non-current matlab, what is non-current? Ki, uh, the life is not restricted to 1 year. It will go beyond 1 year. That is basically the crude way of explaining the difference between current and non-current. Non-current typically would go beyond 1 year. Current assets, of course, current assets, technically what current assets mean, that you can liquidate them for cash within 1 year because they are involved in your day-to-day operations. Okay. Non-current may not be, the benefit of non-current assets is not restricted to 1 year. It goes beyond 1 year at the risk of repeating myself. Okay. All right. Now मैंने कुछ delete किया क्या? Okay. All right. So any which ways, you see non-current assets, they form what portion of the balance sheet? They form around 65% of the balance sheet. Okay, I'm just trying to get a sense of the size and scale of this business, like right now. Okay, all right. Now, if I move forward, inventory is, see, again, inventory typically is not a problem for hospitals. Okay, because it's some pharmacies, some consumable goods. It's typically not a problem for hospitals. Okay, so it's a small number for them. Trade receivables. As you know, receivables are payments which have not received from the customers yet. Receivables, as increasingly, is becoming a problem for these hospitals in India. Okay, because as the health insurance penetration increases, customers will not be paying out of the pocket. They'll have their health insurance companies pay for them, and the insurance companies, they don't pay right away. And especially in a country like India, where we saw that 30 CR people are covered by government health insurance schemes. Okay, and government, of course, doesn't pay on time at all. It depends upon their budget, and so that's another problem. So you would see, and again, I'm jumping ahead of myself. Okay, when we analyze the con calls for this company, you would see they are consciously focusing towards improving their payer profile. They're consciously focused towards improving their payer profile. What it means, in a way, they do not want to overly focus on treating patients covered by government plans. That's the impression that you get. Okay, because of course, the payments first, they do not come on time from the government, and plus the other thing is, government of course negotiates tooth and nail for those medical treatments, right? Let's say a normal patient, you would treat it for like 2 lakhs, and government covered patient, you cannot exceed like a threshold like 50,000 or whatever their caps. So of course that's not a very profitable segment for these businesses, and of course we're living in a capitalist society, right? You can look at any other lens you want, but right now we're looking at from an investor lens. Okay, all right. Okay, so anyways, that is something we'll cover. But yeah, there is an increase in receivables is what we are seeing. Okay? And then these three components now: investments, cash, bank balance. This is all cash. All of this is cash. Okay. So when I come across cash, you know what I do? I need to understand that cash makes up what portion of the balance sheet. 22%. So this is a cash rich company, which is very good. 22% is a good number. 22% of the balance sheet is cash equivalents. So that means they are pretty like cash rich. Okay. That's what it tells us. Especially for capital intensive company, this is good amount of cash. Okay. All right. So let's move forward. Yahan pe other financial assets. So now within current assets, they have something called other financial assets. Other financial assets may they have unbilled revenue. This is unbilled revenue. Unbilled revenue means, many a times, when you are constructing a balance sheet and it's end of the financial year, some treatments are still underway, right? You have not billed for those treatments yet, right? Phone ke bill mein aapne dekha hoga unbilled revenue. If you have a postpaid connection, you would see in the middle of the month, there is some unbilled revenue. That means although you are in the process of consuming the service, but you have not been billed for the service yet. So that's what it means. Okay, so any treatment which is under abhi ho raha hai, hua nahi hai, and that time you're constructing the balance sheet, so that falls under unbilled revenue, which is a part of other financial assets within the current asset. And abhi hospital case mein this is unbilled revenue. For telecom company, this may be unbilled revenue. But for this line item usually is just not restricted to unbilled revenue. This may have bank deposits with a maturity of less than 12 months or what have you. So there may be other things as well which I have listed in this column. Okay. Okay. All right. Then there is something called other current assets, advance to suppliers या prepaid expense. Okay. आप अपने supplier को short term. This advance that we saw in non-current assets. That was a uh, see that advance you give to construct a building which is going to give you benefit for the next 10, 15, 20, 50 years. I'm just थोड़ा ज्यादा बोल दिया 50 years, but it's going to give you benefit for the long term. That's why that advance that you give to the developers falls in the non-current assets. But the advance that you give to other suppliers who may be, let's say, supplying you some medical consumables or let's say some medicines, you know, unka life is short term, right? So that advance, that prepaid expense falls under other current assets. That's the distinction. Okay. All right. So because this asset is going to give you benefit for only 1 year, this asset, building wala asset, is going to give you benefit beyond 1 year. So that falls under non-current assets. So any which ways, अगेन मैं ये सब टाइम इसलिए स्पेंड कर रहा हूं ताकि फर्स्ट टाइम हो रहा है और शायद आपको ये सब पता ही होगा. ऑलराइट, so any which ways, let me move